Well, happy Monday. Want to share with you the latest data here in the Austin metro area. Austin is a renter's paradise. And that's just not according to me. That's according to Redfin. This latest article here says Austin is the most affordable metro for renters. Providence, Rhode Island is the least affordable. What metrics are they using? So, what they're looking at is what's the median rent in the metros. For Austin, it's just under $1,400. What is the income required to rent that property? That's about $55,000. But what's the average or what's the actual median income in Austin? It's almost $70,000. So in other words, they're making more than enough money, 25% more than what's needed to rent that median property. Austin by far is number one in the country using this metric for being considered the most affordable compared to the income. Houston is number two, and Dallas is number three. So Texas as a whole is a great place to rent. You got Salt Lake City, Raleigh, Denver. But here's what's interesting is you go down here, these are the top 10. By the time you get to number 10, it's only 2% better in Nashville. Okay, so really a lot of places might actually be, equal or on par buying to renting or income to rent. So rents are much higher, a different way to think about it, in other metros in Austin. So what's going on here that's keeping rents low? So this article came out in the Austin Business Journal over the last week. And it talked about kind of, as landlords, what are some of the issues that we're facing, the headwinds we're facing? Why aren't rents still going up? So what we're running into in Austin is oversupply. So we built, the market in 21 and 22, we saw about 20% rent growth. We saw a lot of rent growth, high demand, lower supply. But what happened was all the money came to Austin and it built apartments and apartments and apartments all over the place. So during 2024, just last year, we added 32,000 new apartment units to the market. And when you add new apartment complexes, they're empty. So how do you fill up 32,000 apartments? Man, you got to give out incentives. Hey, 3 months rent, 2 months rent, or have lower rent. You're in competition with all these rental units. And on top of that, you've got, less people wanting to move around right now. So you got less demand, higher supply, and it keeps rents down. The year before, in 2023, we added 21,000 units. So in just the last 24 months, we added 53,000 apartment units to the market. That is a city of 53,000 empty apartments that you've got to fill up. That's going to put downward pressure on everything: duplexes, quadplexes, single family homes, condos, townhomes. Doesn't matter. When you add that much supply to a market, it's hard to absorb. Pre-pandemic, we were looking at about 10,000 units a year. So anyways, what happened to our rents? They dropped last year 4.6%. And so what are they predicting this year? They're predicting kind of flat to down again, because we've got to finish filling all these units. Now, having said that, they're saying, hey, moving forward, we're really not expecting, they're saying rents are going to come down for another year potentially. And then they're expecting that they will decrease this year potentially. By the end of the year, it should be fairly flat. And after that, they expect next year rents will start to go back up again. Why? Because we've now filled those units up, number one. And number two, we're going to start reducing how many new units we're bringing to the market after that. So again, just know we're in this kind of rent shift. It's kind of behind the sales, if you think about it that way. We've come down. We might go down a little bit more this year. By the beginning of next year, maybe this time next year, we've finished with the supply. The demand is coming back. Obviously, Austinites, the median, are making more than enough money to pay for more rent. They just don't have to. And so what's going to happen is we need that supply to finish. Demand comes back, and then you'll see rents start to grow again. So that, again, those are predictions on the rent side. Pay attention to that. I think that's going to be one of the trends this year to talk about, is where do rents go? All right, this is going to be looking at some current data. So this is a chart of the full 2024 compared to the last 4 years before that. We are the red line, which was 2024. And again, this is number of home sales. And you can say we were really anemic. We were pretty much below all the other lines for most of the year. At the very end of the year, we got just a little bit ahead of 2022 and 2023. So sales started to flatten at the end of last year, whereas the years before they kept dropping. So that was a good sign. If we look at December, the average sales price was up 4.28%. Over December 2023, median was up about 1.1%. So again, not a lot, but hey, not bad. We were up a little bit. I want to show you these two charts right here. This is year to date sold data for all of 2024 blended. So what does blended mean? That means we put all of January through December together for each year. So total single family sales, look at this, almost hit it on the nose. We were down one house. I had one house that we ended up not selling. It's my fault. So anyways, we missed it by one house. We literally sold the exact same number of single family homes last year. Average sales price for the entire year was down less than 1%. And again, that was really the first 3 quarters of the year. By that last quarter, we started to jump ahead of 2023. But either way, you blend the whole year, it was pretty on par with the year before. Cumulative days on market was up a full week. Why? We do have more inventory. So we've continued to have more inventory, but sales got better in that final quarter. And then median sales price for the full year down 2.4%. And then here's where it really gives you some perspective on how much inventory are we talking. So if we go back to 2022, we had less than 2,000 homes for sale at this week in 2022. We had 1,900 for the entire metro. Single family homes, we now have over 11,000 single family. So more than 5 times, almost 6 times more homes for sale now than we had 3 years ago. So anyways, that's what we're talking about when we talk about inventory. All right, let's talk about the original price versus the sold price. What is the original price? And again, this is not an individual house. This is the market as a whole. But the original price is where people start their listing. And then let's say some of them will sell, and then some of them will have to price reduce. And then where do they ultimately sell? That's the sold price. That's the blue. If you look at the spring, obviously the list prices were going up faster than the sold prices. And so there was a big gap once you got to like March and April. And also interest rates shot up in April last year, and it really crushed sales. So you had a lot of list prices that were kind of mispriced. You had sellers maybe overly optimistic, and then ultimately sales came in lower. But as the year went, you can see the list prices came down. That's the green. And the sold prices bottomed out in September, which is unusual. Typically, they'll bottom out at the end of the year. But you can see the sold prices kind of held steady. In fact, even went up a little bit in December. The average list price was lower than the sales price. That does not mean everything was in multiple offers. It was not like that. But there really, I think some of it's just there were anemic sales. But either way, what we're seeing is that gap between the original and the sold really tightened up in that last part of the year. And we're starting to feel that as we enter 2025. The good properties, if they're priced well, they're in the good locations, they're in the condition buyers are expecting for the price, we're starting to see multiple offers come back on some of these properties. I helped some clients bid on a multiple offer property this weekend. I had a listing early in January where we got multiple offers. So it's not on every property. And there's lots of inventory, especially homes that sat around since 2024. They're not having that kind of result. But if you're a new listing and if you're pricing well in the market, we're seeing more buyer activity start to come out. And that's leading to the best stuff getting those multiple offers. So pay attention to that. This is number of active versus sold listings. Again, the green is how many single family homes are on the market. The blue is how many actually sold. And you can see the listings peak every year in the summer, pretty standard bell curve, but way above how many are selling. We're still trending in the low to mid 2,000 a month single family homes. And yet, as I just mentioned, right now, as of January, 27, we're sitting at just over 10,000. I think this will be the low for our year unless demand chews up some more homes. But anyways, we're still starting in late January. We already have 10,000 homes on the market for you right now as a buyer. So pay attention to that as well. Finally, mortgage rates. We have been at or above 7% the whole year. I do think there are some volatile things happening in the bond market right now that might make this drop below 7, at least maybe for part of the week. We'll pay attention to that. There's been some AI announcements and stuff that you wouldn't think has anything to do with housing, but it does have to do with bonds. It has to do with kind of how people are predicting the market. So pay attention to that. I think we might see rates come down a little bit today. That would be great. But again, not sure. If you are a buyer right now in the market, while this feels low, there's still enough inventory to look at. We are seeing, unless you are hyper focused on one neighborhood or one street, obviously that does get tight. But I would expect now that we're running into February, this is really when we start to feel more and more listings coming to the market. Then they ramp up another level once we get to March. If you look at last year, you can really see every month the number. Here's February, here's March, here's April, here's May. So they really ramp up in terms of sellers coming to market. So that's a good sign for a buyer. And again, pay attention to interest rates. If you are a seller, the good news is we are starting to feel buyers slowly coming back into the market. I think some of that is also seasonal and spring related. Pay attention though to your competition, because I think our biggest challenge is no more rates. Rates are kind of what they are. Everybody's kind of, expecting them to be in the, mid to high sixes if you're a good primary home buyer. Our competition is the listings on the market. So we want to see who we're competing against, how many are out there, where are they priced, how do they look? So we're really going to be hyper focused on inventory. Anyways, I hope this was helpful. If you know anybody looking to buy, sell, or invest in Austin, especially this spring, have them reach out to us. We'd love to have that conversation. And of course, if you want to follow these videos each and every week, make sure to check out our YouTube channel at Ryan Kelly Group. Anyways, we're going to wrap up January. Can't wait to see what February holds. And we will talk to you next Monday. Thanks.